Today is Thursday, July 16th. Earlier this afternoon, we conducted our first Compliance Masters Group meeting for this week. Tomorrow morning, we'll have the other two groups. A topic we had on the agenda, but just figured out we didn't have time to cover, is the results of a recent survey we did on mandatory acceptance of private flood insurance. We had a great session today with Chad Knudsen. So we didn't want to eat up any of his time to cover it, but I want to get those results to you. So we're recording that. On the screen and in the materials we sent you an extensive flood manual. This discussion begins back on page 66 of that manual. We originally did this survey in late August of last year, about 60 days after the mandatory acceptance requirements went into effect, to find out how are you handling these new requirements. All right, and we shared those results with you last year. We'd already decided then we were going to redo the survey this year to find out how your practices have changed over the last year. And things didn't change a lot, but there were a few significant changes. Now, what you can see on the screen, and you can see it in the manual we sent you as well, we have on page 67, actually it's page 66 in your manual, I had to set them so they show side by side on my screen, last year's results. So it shows you up the top of the page, 2019. Over on the right, it's got 2020. The first question was, how often do you receive requests to accept private flood insurance? What we found out last year, what was confirmed again this year, is not that frequently. It just doesn't happen all that often. 80% said it happens one or fewer times a month. So it's never been a big deal, and that's good because there's some work involved when somebody asks you to accept one of these things. The second slide we have, and let me drop down my page here. Oh, went the wrong way. Here we go. How frequently does the private flood insurance policy contain the compliance aid statement? That's a big deal. If you got the compliance aid statement, you can just accept it without review. When you don't have it, then you got to do a rather extensive side-by-side review. And what did we find out in that particular survey? Well, what we found out is that things are improving. When you look at the percentage of people that of the policies that now contain the statement, they've gotten better in every category. Last year, we had 20% that said it never has the statement. This year, there's only 10%. That's cut in half. 10% that said we don't have it. The ones that said always, last year it was 20%, this year it's 25%. So every response has gotten better. So obviously the private flood insurance companies have figured it out. They know if they want their policy to be accepted, they got a much better chance of that happening if they include the compliance aid statement. So that's progress. That's good progress. The third question is when you have to do a side-by-side review. All right, there is no compliance aid statement. You got to do the side-by-side review. Are you doing that in-house, or are you sending that out to a third party? And again, when you look at the two charts here, you say, well, it doesn't look like they've changed much, and they haven't. But again, clear improvement. Right now, 85% of you are saying we do our own review. Last year, it was about 78%. So more of you are doing your own review. But also, it's double the number of you that are doing a third party. Last year, slightly over 5% said we're doing a third party review. This year, 10% are. The main thing that cleared up is last year, 16% of you said, well, we do a little of both. Now, those that are doing a little of both is down to 5%. So everybody's kind of settled on a routine. Most of you are doing them in-house, but a growing number of you are sending them out for third-party review. Folks, I'm a fan of that third-party review. You can do it in-house. It's a lot of work, a lot of time, a lot of potential liability, and you can avoid most of that by farming it out. Our next question, question number 4, indicates when the review is conducted, who do you have doing those internal reviews? And what we're looking at is if you ever accept a private policy and there's a flood and that private policy doesn't pay, very likely your bank's going to get sued. When you get sued, whoever it was that conducted the review will end up on the stand. You'll be deposed by the attorneys before the case, and if it makes it to court, you'll be on the stand testifying. And the plaintiff's attorneys are going to be asking, well, what are your qualifications to do a review like this? Are you an attorney licensed to practice law in the state? Apparently not. Look at our numbers here. This year, nobody has attorney on staff doing the review. Are you a licensed insurance agent to sell insurance in the state? And you're not selling it, so you're not doing anything illegal. But if you had that background, that could be helpful. Well, very few of you indicated that, oh, yeah, we got somebody with an insurance background doing it. For most of you, it's none of the above. That's worrisome because of the potential liability that you're facing. Now, a related question down here in question 5, what's the highest educational attainment of the person you have doing the review? And this particular result, in my opinion, is better. 50% of you said we have a college grad or higher doing it. So it's not like, we have somebody graduated from high school in May. They just started at the bank 2 weeks ago, and we got them doing the reviews. We got somebody who's been through college at least. It'd be nice if we had a law degree or accounting or insurance background, but, again, slightly good news on that particular item. Question number 6. If the review is conducted by a third party, have you made sure that third party's sound? While I'm a fan of using a third party, folks, they are taking on the liability. If they tell you this policy meets the definition of private flood insurance and you accept the policy and then it doesn't pay, the plaintiff whose house is damaged by flood and has no flood insurance because it didn't pay, they're going to sue. They're going to sue your bank. They're going to sue the insurance company, and they're going to sue the company you hired to do the review. So the company you hired to do the review, are they solid? Can they afford this? And what we found out, not necessarily real good news, over on the right, none of you this year were doing the review. None of you. Last year, a few people said we were doing a review. Folks, a good idea to look at their financial statements. So, while I'm concerned that you're not doing a review, the next question, question 7, and this is real good news. We were asking, okay, well, do you make sure the company has an errors and omissions policy? So if they screw up and say, yeah, this is good stuff, and you believe them, and it's not, do they have errors and omissions coverage? Everybody that said they're using a third party said, yes, we make sure they have adequate errors and omissions. Folks, that's not only good for risk management to make sure that you're handling private flood insurance properly. That's important, but it's also important because of regulatory requirements that when you're using a third party, you got to do third party due diligence, and this is part of that due diligence. So again, very good that you're making sure they got that errors and omissions coverage. All right, the next question is the review. If the review is conducted by a third party, what do they charge? I mean, everybody's worried about this. And last year, when we first did the survey, we were still gathering information about companies to do this, and we were estimating that it could cost $200, $300, $400 to get a review done. Last year, most of you were getting it for less than $50. A few of you are paying $100 or $200 or more. Things haven't changed dramatically since last year, but half of you are paying $50 or less. All right, 25% are paying $100 to $200. 25% are paying over $200. Now, folks, we didn't get a huge response to the survey, so we can't say these results are statistically significant for all the members of our master's group, but for those that responded, most of you are going with that less expensive option. There are good companies that'll do the reviews for less than $50. We've discussed in the past, how can they do it that cheap? It takes an hour or two to do these reviews, and if you got somebody with high quality doing the review, they're going to be paying a lot more than that. Again, they're doing it based on volume, and it's very doable to do a lot of these for a reasonable price, so that's good. Another big concern is if you're sending these out to third parties, what's the turnaround time? How quickly do they get it back to you? Well, what we found, and this is good news, is that 80% of you are getting them back in 1 or 2 days. All right, that's great. There's one company out there that guarantees a 24-hour turnaround. They say you usually get it done in an hour. If you can get it back in a day or two, that's great. When you're up in that 3 to 5, 7 day range, this could very likely be delaying closing. So I hope you're getting it quickly. The next question asks, do they give you a written report? They should. Written results that documents what they did to determine does it meet the definition of private flood insurance. And again, 94% of you say, yeah, we get a written report. Now, we ask a little follow-up question. Do they explain how they came to their conclusion? But an important part of this is, do they give you enough information in their written report? So if you want to consider accepting this policy under discretionary acceptance, so they told you it does not meet the definition of private flood insurance. Do they give you enough details so you understand why it didn't? And might you consider accepting it under discretionary acceptance? You don't want to have to go back and redo their review work. They're sending you a report and it's well done. You can look at it and it says, it qualified on every mark except the deductible was higher than allowed under a FEMA policy. You go, okay. Well, can this customer afford that deductible? Yes, they can. Let's go ahead and accept it under discretionary acceptance. So, again, we hope they're giving you good detail. We also ask about mutual aid contracts from like Amish aid, Mennonite aid, and what we heard last year, what we heard this year is, not a whole lot of you are receiving requests from customers. Will you accept Amish aid or some other mutual aid contract? Doesn't happen often. All right. So that's good. Not many people are asking about it, so it's not a big concern. You don't have to worry about it a lot. Now, the next question, next two questions actually relate to this first one. Have you ever accepted a mutual aid contract? All right. When we looked at the numbers, how many of you have had requests? Not many, but are you accepting it? What we found in our 2020 results, 3 of you have been requested, will you accept a mutual aid contract? Okay. Only 1 of the 3 said, yes, we went through and accepted it. That's a good thing. Good thing for your customer. If they've got Amish aid, they don't have to pay anything. They're automatically covered. They got insurance without expense. Can't beat that stuff. Only 1 of 3. Well, what happened to the other 2? You received 2 other requests, and you didn't accept those. So what happened? The next question kind of gets in and explains that a little bit. One of the conditions for accepting Amish aid or some other mutual aid contract is that your regulators acknowledge that it's acceptable. Yes, you can do it. And the 2 cases where you did not accept it, you said the regulators quashed the deal, said you can't do it. So that's a little disturbing. And, we anticipated that, all right, if you got regulatory agencies turning this down, who are they? We asked that in the last question. One of you said we got turned down by the OCC. One of you said we got turned down by the FDIC. Again, a little surprised by that result. The OCC has had kind of an open arms approach. They've indicated they're very willing to accept these mutual aid contracts. The FDIC, on the other hand, had told us in advance we're very unlikely to accept it. So I'm not surprised that the FDIC rejected one. A little surprised that the OCC did because they had indicated, like I say, a very open arms approach. So that's the results of our survey. Interesting stuff. You got there, you can study it. If you've got any questions, give us a call. For those of you who are listening to recording, we either saw you early today. Thank you for joining us in. The rest of you will see you tomorrow. Thank you for being a member.